Okay, yeah, just like I said, somebody asked me to take a look at COEP on the live stream last night, and I missed it, right? Because we have a lot of tickers to evaluate. And as I'm looking at the tickers getting ready for the next live stream, right, which is going to be tomorrow night, I actually came across COEP and I'm looking at it and I'm like, what is going on here? So, what I'm going to show you here, guys, is actually an immense amount of rare occurrences in price action and actually in the in the math, right, and statistics. So let's go ahead and go over all of these signals now because there could be a massive upside for this. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a COEP technicals, raw price action, and statistical threat of analysis on this happy Sunday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right in. All right, so let's start off with the basics. First of all, let's block out the substance indicator. Okay, so we are looking at a broadening descending wedge on the daily time frame here. Okay, so already a good time frame for a potential reversal. And why are we talking about reversal already? Okay, so we are looking at, I just want to show you this. Okay, the golden rule of three: 1, 2, 3 tests of the resistance from this broadening descending wedge. Usually the third test, following the third test actually, is a capitulation event, which happened, right? We came right back down to the trend line and we tested the support level. And now we are actually continuing on to the upside. And the upside continuation is very particular here because it goes up, it's going up to test number 4, which usually test number 4 is the true breakout test. Okay, so per the playbook rules, when you trade a broadening descending wedge, and by the way, I'm actually going, just so you know, I'm not talking about a 198 target here, okay, from 148. Yes, I do find the high probability that we can reach 198, but this is not the target that I'm looking for. The target is actually just that way. Okay, so I'll go ahead and explain why, but I need to explain to you from the foundation why it's going to do it. Okay, so, or why it can do it, better said, right? Because of course nothing is guaranteed in the markets. You guys remember that you can lose more than you gain, okay? Or you can lose more than you have even. Okay, so definitely know that, okay? Let's go ahead and continue on the analysis here, okay? So yes, test number 4 is the true breakout from the golden rule of 3. If number 4 fails, we still have the opportunity to break out on test number 5, as it is another probability for the upside, right? When we start getting into test 6 and 7, it starts to get a little shaky for the bulls. But in this case, the price action is suggesting a continuation to the upside and a breakout on test number 4. I guess I can give you a little bit of just another formation, right? I usually don't like to call these tiny little formations, right? But this is, let me just go ahead and show you real quick, right? So we have right here the shoulder, we have a head, and the other shoulder, right? So we have a little bit of an inverse herpy-derpy right here, and it is suggesting a potential upside, right? So the inverse head and shoulders. Okay, so the way that we can actually gain the price objective for that formation is actually by taking a trend line from the neckline of the formation itself, which could be the confluence or I guess these two candle tops right here, right? So we'll take it from that neckline, right? And then we'll apply it to the top side of that formation. Okay, there are several ways to look at this. It's just, you know, whatever. So let's go ahead and apply the breakout, and it's suggesting the top side, right? So that's kind of giving us now a little bit of a resistance area, or a temporary resistance area, right? So we'll go ahead and just take note of it like this, and this would essentially be our resistance point, okay? Now, price action would, upon succeeding this top side here, which would be very confluent to this here, we would essentially start now breaking market structure, right? So this was our present high, our range high, and we would then be making another high here, okay? So this is now introducing the possibility of converting this into an area of support before a continuation onto the upside, right? So the target from this particular point in time to the upside, we can kind of see that, right? But there are other signals that are absolutely more important for us to look at, right? So let's just go ahead and take into consideration that we would do something like this, right? And we are writing, and we would be writing some type of ascending channel, right? So something like this. So now, I mean, the price objective here would be taking us to around upside of $2.30, which is essentially right in resistance with this area here. Okay, but that, I feel like that's not quite it, and I'm really being honest here with you. Okay, so I'm showing you what I literally just looked at and went over in my head. Right, so let's go ahead and continue on the analysis here, because this is already suggesting a pretty massive upside. Right, so now the upside that you're looking at from the current price action to that target all the way up here that we're looking at is already a 36, almost 37% gain, right? So now let's go ahead and open up our substance indicator. Okay, so this is already showing us some confluence. Okay, so notice here that the top side of our resistance level on the weekly resistance is telling us 159, which is very curious because the top side of this channel here, or the wedge, is 163. So we're already looking at very confluent targets, right? So now let me get away from this, and let's just, I haven't actually applied this, right? But I can actually take a fib, right, from the previous day's swing high to the swing low, and then we can actually see if we do have something there or around that area, right? So, so 159 was the substance target, right? So the 1.618 is 153. Right, and now we have the 163 located right at the 2.618, don't we? So we have now confluence of resistance. Okay, so this is definitely a good sign. This resistance right here, which would be the next day's resistance, is suggesting that we could potentially go to 163 tomorrow from 148. Okay, so upon this touch of the 1.618, very 2.618, very likely we can wick up to the 170 area, reject, and then come back to the 2.272 and the 2.618 to verify or validate this area as a newly converted what was a resistance into now a support before a continuation to the upside. Okay, so that would be the first move. Then we can continue on to that 37% upside thrust. All right, now let's go ahead and continue on the analysis here, because it's going to get even yet more and more interesting, okay? So, all right. Now, the target that we're looking at here is the $1.90 per a mean reversion tool that I use. Okay, so this is actually not my algo. This is actually someone else's, and I'm a fan of it. I use it often. Okay, so I want to just point out a couple things here. Okay, because the weekly mean, which is right here in the middle, right? You can see the time frame W, status price below mean, distance from mean is 500%. Right? So this is where it starts to get weird. Okay, well, first of all, we do have a target of $1.90 there. Okay, so if we can look back here, $1.90 is actually just upside of the 4.618 and our top side of our resistance from the broadening ascending wedge, 198. Right? So that's already showing us that this target is not a random target. Okay, so the mean, based on statistics, based on the price action in the current time frame, is suggesting the mean to be at about 190. Okay, which is very, very similar to the target that we have right over here as a resistance point and the 4.618. Even if we were to take, even if we were to take this, then you can start to see more confluence, right? So there you go, 196 at the 3.272 and the 3.618 at 203. Right, where we're talking about with our range, discretionary. Okay, so this is getting just more and more juicy. All right, so this is already suggesting some ridiculous upside, even still in the shorter time frame within the next maybe day or two. Right, already 40% up. Now, let's go ahead and continue on the analysis, because there's even more. My goodness. All right, so now this is that weekly time frame that we're talking about, but I want to talk to you about the 3-day first. Okay, so this is the 3-day time frame suggesting, well, first of all, my algorithm versus the algorithm that this other one, the MRC HLC3 mean reversion, let me just go ahead and show you, right? So we have two different statistical algorithms. Okay, so this one here has a suggestion of the mean reversion at, let's see, $7.38 on the 3-day. Mine is actually suggesting $7.25. Two very distinct methods in math probabilities here. They're very different. They are not the same whatsoever. Okay, here's the other thing. 3-day volatility at critical contraction, and it's starting to contract, which what does it mean? If you remember correctly in my videos, that usually means a mean reversion is in play. Okay, so 3-day time frame is a large time frame. Notice the stochastic momentum now starting the curve. Okay, so this is why I'm saying over the next couple days, there could be an explosive move here. My particular algorithm, noticed that it actually gave us a short signal right up here, right at the opening of this candle at about $10, and then it capitulated. Notice what we're getting down here. My goodness. Okay, so I'm just saying. Okay, I'm just saying. Please remember, you guys, do your own due diligence. Okay, just you can't hold it against anybody else. Okay, just make sure to make the right decisions upon your stuff. Okay, just do your own DD, your own due diligence. Everything will be cool. Okay, I'm not a financial advisor. I really can't suggest for you to buy or sell anything whatsoever. Okay, but it's still, hold on, because there's still more confluence. Okay, so now let's look at the daily time frame at the 100 SMA at this ridiculous target, right? So we're now looking at these targets for some reason. Already we're looking at 725 on my mean reversion, meaning that we're reverting to the mean right down here, right? We're already doing that. Then we're actually correcting here. So we already have the bi-daily and a 3-day mean reversion versus the 200 SMA at 794. Okay, let's go to that. Let's go to that bi-daily. So the bi-daily mean on the reversion, on the other reversion, right, is suggesting, oh, I'm sorry, the 200-day SMA. So let me just go ahead and pull that up. My apologies, right? These are the averages right here. This is the 200-day SMA located right at about 802. But what I mean by confluence here is substance, okay, which is the relevant areas or the more probabilistic areas of support and resistances. This is my algo, okay? Notice, right? I know it's hard to see that right there, but you can see it right. You can see the value in right at the end down here with this menu here. You see it? 824. Okay, so that's 824 right there. Okay, so the 200-day SMA is located right at about $8. Okay, so now the $7 and $8 range is starting to show for some reason. There is the 200-day SMA there on the bi-daily. There is the substance resistance right here, which is the monthly resistance. Okay, already suggesting some weird targets. Okay, now another thing, the weekly substance confluence with the mean. Okay, so now let's go ahead and get rid of the averages. So now let's go ahead and look at substance with the weekly mean. Okay, so let's go ahead and pull that up and see what we have. The weekly substance 824 that we just talked about, right over here. You can see that target right there, which is this color, right? So 824, and look at where the weekly substance is, 890. Okay, so that's already looking at some weird targets within $8 and $9. Okay, now let's go ahead and pull up the ARC. I actually didn't check this, the reversion variant. Notice that the reversion variant at 829. So all this 7, 8, and almost $9, that's a long way from here. Okay, that's a long way. But this confluence here, it doesn't happen often, is what I'm trying to say. Okay, so I don't know what this ticker is about. You guys know I don't follow any fundamentals. I don't care. Okay, everything is just about probabilities and mathematics here with me. Okay, so I don't know who they are. I don't really care, right? Because you know I don't care about the tickers. I just care about the price action in retail, right? So in this case, I'm getting so many signs. Next thing, let's go ahead and go over the RSI. Okay, so what you are looking at here is the divergence chart on the 3-day. Okay, so this is a very large time frame and also a very credible time frame, by the way. What you are looking at here is divergence, which is the opposition of price action versus momentum. And what is that telling us? We have one huge drive drive of 3-day hidden bullish divergence, okay, and it is seriously pivoted towards the upside right here. Moving average pivoted towards the upside, and we already validated it, okay? So now we have a confirmed drive of one macro time frame, bullish divergence, hidden bullish divergence, suggesting an upside continuation, and it has already started. Okay, so let's go ahead and now look at the multi-time frames. Okay, so the multi-pane here that we always take a look at, right? I'm sorry that I didn't actually prepare this. I was just so kind of anxious to get it to you, right? So just full discretion here, you guys, and full transparency. I may actually trade the signals in this, you know? So, yeah. So let's just go ahead and refer to the immediate short-term time frame, 30-minute. We'll load up the 4-hour there. We're going to load up maybe the 8-hour here, right? We'll load up the daily, and let's see. We'll even have the 3-day and the 5-day, okay? So everything is looking good. Okay, now what are you noticing here? What are you noticing here? Yes, everything is upside pivot, okay? Everything is literally pointing to the upside. Guys, the last time I saw something like this was actually through COSM, and you know what happened with that, right? And also I noticed this with GTII. I've noticed it several times, but this, all the confluent signals along with every single time frame, macro and small time. I'm talking about tiny time frames here, 15-minute even, right? Let's see. Okay, we may have a loading zone now. That's a good thing, okay? So jumping into the 30-minute and then into the hourly, we have that support right here, then a continuation to the upside. What would essentially validate the support for an upside? Well, it would be the 4-hour because it's already pivoted towards the upside. We have the upside on that 14-day simple moving average. Notice that the 8-hour now gives validity to the 4-hour, which has that upside pivot as well. 14-day simple with an upside pivot. Notice the daily right over here with a huge upside pivot, bouncing right from that 14-day simple as support. We have the curvature starting already, guys. Guys, I don't know, man. Something is up in this ticker. Okay, this is suggesting something incredibly explosive, and I am sorry that this video has gone on this long, but it is just so important for me to show you that even the 5-day time frame suggesting a massive upside pivot here. Okay, you guys. So just remember, okay, go ahead. Just I'm not a financial advisor. Okay, just do your own thing. Okay, so I'm just full transparency here. I am going to trade this. I'm probably going to trade VIRI as well because those two tickers are just, I don't know what's happening. But guys, there are serious targets to look at here, okay? So very interesting times happening for the COEP asset. I apologize again for this massive video, but I hope you did watch. And if you did watch all the way, please hit that like button, subscribe to the channel, and make sure to refer to the links in the description below if you would like to join the ArcMasters trading course. The second track should be beginning in the second week of or third week of April. It's going to be covering everything from the very foundation of trading, the very beginning, all the way to advanced topics and mathematical application. Okay, you guys, so with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.